This is an ABC News special report. Now reporting, George Stephanopoulos.
Good afternoon. We're coming on the air now with news from Wall Street. Want to take to the floor of the stock exchange. There you see the Dow down more than 1,000 points right now, coming on top of a more than 600-point loss on Friday. That puts the Dow in negative territory for this year, down a little more than 4% right now. But of course, this comes on top of a healthy gain in the stock exchange over the last year. If you look back to when President Trump was inaugurated back in January 2017, the Dow was below 20,000, now about 24,000, so close to a 25% rise since 2017. But it has been a tough day on Wall Street right now as we approach the closing bell. The Dow continues to drop, now down about 1,100 points. I'm here with our chief business correspondent, Rebecca Jarvis. And Rebecca, this would be the largest point drop ever in Dow history, but far from the worst day.
That's right, George. If you look at this in point terms, we will close somewhere down about 1,100 points today. That's sizable, but nowhere near as bad as it was on September 9th, 2008, when the Dow fell 777 points, and that was a near 7% fall that day. We've just come a lot farther since then. That's why the percentage terms today are still down 4.6%, but not as bad as then.
That famous Black Monday in 1987, where the Dow dropped more than 20%. But at one point today, the Dow was down about 1,600 points. It was even worse.
That was even worse. It was looking like we could be in that negative 7% territory, so we've come up from there. But, George, as we were speaking about earlier, there are a number of veterans on Wall Street who have been feeling like something is coming, that this is meant to be, that we were going to see a sell-off like this at some point in time, given how far stocks have come in the last year, up 22% in the last year.
Right, but the economy's still quite strong.
The jobs report on Friday, 200,000 jobs were added. The wage gains are happening, and that's what we were really waiting on, those wage gains. And some of that actually can have a negative impact on this market, because as wages and jobs improve, it gives more reason for the Fed to hike interest rates, which in turn can weigh on stocks.
We have now had the closing bell. There you see it right there. The down about 1,178 points right now. That'll settle for a few more minutes, but a more than 4% loss today, coming on top of a 600-point drop on Friday. Of course, that has wiped out the gains in the Dow for the year. Rebecca Jarvis, you'll be joining David Muir tonight on World News. All of you at home can get the latest breaking news anytime by downloading the ABC News app. And I'll see you tomorrow on GMA.
This has been a special report from ABC News.
Hey guys, Amna Nawaz here. We're continuing to watch the Dow. There you see it dropping to the lowest level of this year, essentially wiping out many of the gains from last year. The markets have now closed. It's down over 1,000 points. We're going to bring some analysis, explain to you exactly what you are seeing here. So stay with us right now. The White House earlier today, just moments ago, was asked to respond to some of these drops. Obviously, the president has been quick to tout the many economic gains over the last calendar year. Many of them result as of the tax cuts as well. He was speaking earlier in Cincinnati, Ohio, at Schaeffer Corporation, touting some of those tax reforms and the many gains in the economy since they went into place. All the while, this is what's happening with the Dow. Take a look at where the markets are closing today. This, of course, comes on the heels of a drop last week as well. On Friday, the Dow closed 666 points down. Other major indices as well also closing down. But the White House responding to that today, saying, look, this is part of the normal ebb and flow of the market. And the overall direction of the economy under President, they say, remains strong. So let's try to put some of this into context now. Rebecca Jarvis, ABC's chief business and economics correspondent, joins me now. Rebecca, a lot of people are looking at this number and wondering what the heck is going on. So tell me, what's happening here?
So if you look at it in terms of what's happened over the last couple of days, it doesn't look good. Over the last couple of days, the market has wiped out the gains for the year. If you extend your picture and your horizon to a longer span of time, if you look at over the last year, the market, even after all of these declines, is still up 22% over the last year. And if you look at the last 5 years, the market's still up about 75%. So Amna, people are oftentimes looking at this, trying to put it into real terms. In real terms, what that means is if you put $1,000 into your 401k 5 years ago, you would now have about $2,000 in that 401k today, even after everything that we've been through over the last couple of days here.
And Rebecca, this number is just one indicator. Obviously, there are other economic indicators we have to pay attention to: jobs, wages, consumer spending and behavior. What can we say about where we are with those?
Well, those continue to trend upward. What we saw on Friday with the jobs report, 200,000 jobs added in the month of January, wages rising at their fastest pace in 8 years. All of that on the surface is good news. It's good news for workers, people who have been waiting for those wage increases. And I should say, there are about 50% of people in this country, about half of Americans, who don't even have money invested in the stock market. So where they would really feel that benefit is in the wage increases. And what we've seen is those wage increases are starting to pick up. And overall, that data on the economic level is looking good, in particular for workers. The issue, Amna, is that the Federal Reserve, for many years now, throughout the financial crisis and leading to the current days, has kept interest rates near rock bottom lows. And at some point, the Fed has to start increasing interest rates. The concern right now on Wall Street is that we've hit that moment in time where the Fed starts to hike and interest rates start to rise. Well, when interest rates start to rise, that means the cost of borrowing goes up. So people and businesses tend to borrow less money and tend to spend less money. That can weigh a little bit on the overall economy.
So, Rebecca, we've been hearing this word correction for a while,
Sure.
right? If this is that correction, what can we expect? How long could it last?
Well, if this is that correction, a correction is 10%. So we are already most of the way there at this point in terms of the last couple of trading sessions. It could very likely stay volatile for a number of days here. And one of the things that Wall Street tracks to look at that volatility is something called the VIX. Some people will call it the fear gauge on Wall Street. And today, that gauge of volatility spiked 75%. And really, Amna, part of that is because we just haven't seen that much volatility. While the market has continued to chug along and basically put in new highs over the last year, we haven't seen a lot of volatility. And that volatility certainly is going to create some white knuckle days for people. But at the same time, it's something to keep in mind that, again, if you go back and you look over the last year and the last 5 years, it's really the longward trajectory that people out there should be thinking about when it comes to their 401k, when it comes to setting aside money in their nest egg. And over time, if historically you look back at the markets over time, you have these years of highs and lows, but over time, in general, the market returns on average 7% year over year. That's why it's all about investing for the long term and not trying to time the market, not trying to look at a day like today and say, oh, I need to sell everything, or a great day and think, oh, I need to buy everything. Because to put that into context, a couple of weeks ago, January 26th, the market made a new all-time high. So if you were going along that line of thinking of trying to time everything and you said, oh, it's time to buy, well, you wouldn't be feeling so great today.
It's a much-needed perspective there from Rebecca Jarvis, and much more coming from her tonight on World News as well. Rebecca, thanks so much.
Thanks, Amna.
Thanks to you as well. Head over to abcnews.com, get the latest on this story and many others, or download the ABC News app. Get all the breaking news right to your phone. For now, I'm Amna Nawaz, and I'll see you back here soon.